The chair now recognizes Mr. Sherman, the ranking member of the Capital Markets Subcommittee, for 5 minutes for an opening statement.
Glad we're having this hearing, the second of today. A little jealous of Ms. Wagner for she is in a situation where she's allowed to hold 2 hearings in one day. Sometimes you're not allowed to hold 2 hearings in the same month under some circumstances. We're talking about removing barriers to private placements and small business. Keep in mind that sometimes barriers are good, sometimes they're not. We're always told the barrier prevented you from investing in Apple. Maybe it prevented you from investing in pear, banana, or kumquat. And when a barrier successfully prevents an investor from investing in a bad or fraudulent investment, or an investment where there's not enough information to evaluate it, that is not just good for that one investor, it's good for our overall capital markets. The willingness of Americans to invest is dependent upon the protections they enjoy. And our present system is not working all that poorly. When the private placement market raised $4.45 trillion from July 1 of 2021 to June 30th, 2022. And it did so without the biggest frauds and disasters that we're aware of coming to mind. I remember when the biggest failures were WorldCom and Enron. Today, the biggest failures or most famous ones that come to mind are FTX and Luckin Coffee, not subject to U.S. regulation. If you send your money to China, you send your money to the Bahamas, you cannot then complain that Gary Gensler did not protect you. We should be drafting statutes that help genuinely small business. When people in my district think of small business, they think of Casa Vega on Ventura Boulevard, not some company with a $2 billion capitalization. That doesn't mean we shouldn't draft statutes that help medium-sized businesses, but we shouldn't paint a picture of a pizzeria and then draft a bill for a $2 billion enterprise. We need the right picture when we're drafting the bill. As I think all of you know, I'm old. Even before I came to Congress, I was in the business world as a CPA and attorney, and back then, banks lent money to small businesses even when there was a chance of failure and without taking a note on the owner's home. They would make a prime plus 3, a prime plus 4, a prime plus 5 loan, and that was a fair loan because that loan had a 4 or 5% chance of a default. The business might have a 4 or 5% chance of failing, and if that were to happen, the bank might recoup only half the money that it lent. Today's bank examiners won't let you do that. And so banks, the traditional way a small business gets financed isn't available. I made that point in this room, but not at our hearing, but the financial institutions hearing this morning. And so what we need is for our banks to be able to have a portion of their loans, a portfolio, with some risk of default and some risk of loss. A second source of capital is small business investment companies. Last year, along with Mr. Huizinga, I introduced a bill that would help those companies get capital, and they then put their capital into small business. Due to a quirk, investment index mutual funds can't really invest in small business business development companies because of the way the SEC defines the expenses of the mutual fund that's making the investment. BDCs are a vital source of capital to the genuinely small business. We're going to reintroduce this legislation. We're looking for co-sponsors who want to be originals. We'll probably reintroduce it tomorrow. It's the Access to Small Business Investor Capital Act. I'm told that between the 2 hearings today and then one we'll do in early March, that we'll be considering 30 bills, including discussion drafts. As far as I know, the Access to Small Business Investor Capital Act will be the only one that has an official Democratic chief author. although I'm thrilled to have Mr. Huizinga working with me on the bill, and I'm hoping that we won't just be talking about 30 bills, but even more and more with Democratic chief authors. So I look forward to working with you both in the morning and the afternoon to have a balanced approach to making more rational our private offerings, not with the goal of reducing or increasing regulation, but making it more rational. I